Interest rates have doubled. Ah, inflation's coming. Inflation's coming. Get gold and Bitcoin now. I hear this. I'm going to show you the chart. All right. We're going to look at the interest rate cycle. My son just looked at me like, what is my dad talking smack for? So here's the 10-year. And you can see down in November, it was at, if I can get this thing to work for me, the 10-year was at 0.89, and now it's at 1.17. But if we go to even here, let's see, let's go to in August, it was at the 10-year was at as low as down to about 0.5, to even a little bit lower than that. Here's August 4th is down to about 0.5. All right, so interest rates have more than doubled on the 10-year Treasury in 6 months' time. All right, let's look at the 30-year. The 30-year right now is at, where's that guy? Hold on just a second. That's a 10. There's a footsie. The 30-year is at 1.94, and it got to as low as 1. I think it was, back in about 1.2. So it hasn't quite doubled. I think at one point it actually broke below 1%. So it's basically both have doubled. The long-term and the short-term government interest rates. I have no idea what the corporate ones are doing because I just don't care. But at the end of the day, everyone's freaking out. And I have to chuckle a little bit at that because I did a video, shows what I know, back in May of 2018. Let me just show you the cycle on that. In May of 2018, I did a video, and if we go back, right there, and you see that top right there? Right there. Let me get this pencil here, if I can make that work. Right there. I did a video that the 10-year Treasury broke 3. Is this the end of the low mortgage rates? And I absolutely thought it was, and I think I actually was talking rather definitively that it was. It didn't mean. I still don't think inflation is imminent by any means. Look, I could be wrong. I don't know. I don't think it is. But anyway, I mean, there you go. There is the chart again. That's a 10. And if we go to the 30, I mean, you just got to look at everything in relative terms, man. And there's a 30, same thing. I mean, the 30, the is at 3.5. So yeah, the 30 at 3.5. Remember that was when they were talking about inverted interest rates. The 30 was at 3.5, then 10 was at 3.25, basically. And that was just on one day. And remember they were saying inverted yields. The whole thing was nuts. Anyway, people were panicking, or not panicking. We're freaking out. Then people in Market Watch. Oh my goodness! People in YouTube. Hi, who you got? Oh, who you got, Pablo? Touchdown Tommy? Okay, I'm gonna mortgage my house and bet on Touchdown Tommy. But it's the same thing. Just because the interest rates on a cycle have doubled in 6 months' time, that's not necessarily inflationary. It doesn't. Maybe. But this idea that this is indicative of huge inflation to come, just 2.5 years ago, man, we're at friggin' 3.25 on the 10. We're still, we still need to go up 300% to get there, which is still a half below where we are historically with a 10. So let's look at, it was in my BitChute page, by the way. If you're not following me on BitChute, please do. So let me just pull something up here. Let's just look at tradingeconomics.com and just let's be level-headed here. S&P books new record despite weak employment. Now, I was reading my man Brian Westbury over at First Trust, and he's still stoked on the employment. He said, look, yes, this month was bad, a lot worse than expectations, but we think there's going to be a record for employment growth in 2021. We'll still be well below where we were pre-pandemic reaction. Notice I didn't say the pandemic is the reaction, but he's still stoked on the economy. U.S. job growth rebounds, huh? That's a weird headline because we only got 49,000. Not good. Even Sniffy Joe was saying we got to have more than that. So we'll also take 10 years to get back to where we were. But anyway, let's go down and let's just look at interest rates. So we can see we still have 0 in Europe. Zero Germany, zero the UK is 10 basis points. The euro area is negative, or not negative, zero. The U.S. is 0.25, and that's the essentially the Fed funds rate. But there you go. I mean, we still have negative interest rates, even in Japan's negative interest rates. There's half of 1% in South Korea, Spain 0, Australia 10 basis points. I mean, Switzerland's negative three quarters. Poland's freaking 10 basis points. I mean, give me a freaking break. Sweden, Belgium, Thailand's 0.5. No, it's Austria 0, Norway 0, Israel's 10 basis points, Ireland 0, Philippines is only 2, Singapore is 18 bips. I mean, this just, I'm sorry, man. There's just not any. That's not indicative of, oh my goodness, the U.S. is going to have massive inflation and thus interest rates are going to go through the roof in the U.S. Well, across the world, they're just not. It doesn't make sense. Well, I mean, think about it. Why would you go to Poland and buy a bond in Poland? What do we say we're getting in Poland? 2% or something like that? Or 10 basis points when you could buy a U.S. bond at 25 basis points. You see what I'm saying? It doesn't make sense, man. And the same thing on the 10-year. You can look at the 10 years as well, but just come on. All right, so then we still go to inflation. Look at it. Inflation across the world, 1.4 in the United States, 0.2, 0.9, negative in Japan, again, after all the spending, this debt to GDP. Germany, 1%. India, 4.59. UK, less than 1. France, less than 1. Italy, less than 1. Brazil, for heaven's sake, 4.5. Canada, less than 1. South Korea, Spain, Australia, less than 1. Mexico, 3%. I mean, give me a break, man. The Netherlands is 1%. Switzerland, negative inflation, deflation. I mean, this isn't indicative of a mass inflation. It's just not. Now, Russia inflation rates near a 2-year high. That in of itself is okay, 2-year high. I mean, when in May of 2018 we hit a 2-year high for interest rates, and look what just happened. It fell like a freaking brick through water, and it wasn't because of coronavirus either. I mean, in 2019 the interest rates are dropping like a brick in water too. I mean, I'm looking at it right now. 2019, we went from 3.037 in the 10-year, and went down at the end of the year at 2.249. Had nothing to do with freaking the Chinese flu. It didn't. So, and here we go. Bond market indicator of high consumer inflation, the highest since 2013. I'm not trying to argue against inflation. I have no idea. You have no idea. No one has idea. But I'm seeing people on YouTube, like in articles now, saying, "Oh my goodness, inflation is imminent because interest rates are going up." I'm like, they're still well below where they were, man. Across the world, interest rates are low. Across the world, inflation is low. You think U.S. operates as a little bubble? Nah, nuts that. Anyway, I always like the trading economic stuff. It's just fun to look at because there's so much data here. Because you can't look at the U.S. in a bubble. It has to be consumed with other things too, man. There's all kinds of other stuff going on throughout the world that doesn't indicate. And here we go. Canada PMI Purchasing Managers Index is still in contraction territory. I don't know what that means. I mean, I know what it means. But who knows? All I'm sitting there thinking, I look across the board, and none of this looks very inflationary to me. That's for sure. Part two of that, I sit there, I say, we're talking to Dustin Tibbetts last night, Jazz Wealth, of all the pent up potential for massive amount of liquidation housing. And this, I got to think this through some more, man. How can you have that much people who are underwater for by hook or by crook? They're not paying the bills on the mortgages. And they're just going to, Sniffy Joe's is, because the CDC is the one who puts the moratorium on. I just don't understand. Why would the politicians give away their power? They just don't want to be held accountable. It freaking ticks me off. Anyway, so you get, I think he said like 3 million units are 90 days or beyond 90 days of paying a mortgage. Now, is that indicative that they don't have the funds to it, or are they just smart and they're not paying the mortgage under the assumption? I don't know what's going on. Who knows? No one knows nothing. But let's just say half of those are truly, they can't pay their debt. And right now they're like, whatever, man, no more. I'm not getting put out because of moratorium. Well, that can't go on forever, I wouldn't think. So when they lift the moratorium and the landlady says, you got time to get out, like the George Thorogood song, one bourbon. I wonder if I'll get demonetized for saying that. One scotch, one beer. I can't afford to pay the front rent. You'll be lucky to get the back rent. That's George Thorogood. Using a song that other black blues musicians did. Let's always make sure we recognize who actually did some of these songs for sure. Because I love George Thorogood, I love Led Zeppelin, but a lot of that stuff came from black musicians. A lot of them didn't get their due when it comes to financial rewards. Anyway, long story short, I'm sitting there thinking, okay, so all these guys, they gotta get put out. Well, what happens to the price of houses that come to the market? I mean, Dustin was telling me about the foreclosure he bought. Half, it basically went on sale for half, man, relative to what the market rate was in that neighborhood. I was like, now he's got to do a crap load of work to it, but that's going to go to the comps in that little neighborhood down there. You know what I'm saying? It's just that's just one house, but you do that 1 million times over, 2 million times, 3 million times over, and that's just people who own the homes. Never mind the renters. I don't know. It's just that. I don't know. I think I don't think we're anywhere near out of this yet. I don't think so at all, and I don't think it's inflationary. I just don't. But we shall see. All right, we'll see you guys. Love to hear your thoughts.